Okay, welcome guys to the to one of the sort of more educational webinars where we want to sort of get a bit more training under your belt. Morning, Robert. Now this is all about how to easily identify currency direction. Now there's two different things here that you need to sort of get your head around. Now, I just want to make sure that you guys can hear me okay. Everyone good to go? It looks like everyone's got good sound. All right, so now looking at the webinar itself, I mean, this is one of the most important aspects of your actual trading. All right, so one of the key things that you want to be able to do when you are going to the currencies and, coming back to look at Reuters, for instance, is actually, first of all, identify currency direction. Now, let me just tell you where it comes from, and then I'll show you how to easily identify it. Now, if let me just drag this image over, right? We sort of did. There's a few things coming up on the website. All your members will be able to go through this. This is going to be part of the Forex 101 stuff. It's part of the Forex help desk, and Mark's got a few other good things going. But let me just give you a quick run through here of where does currency direction come from? Well, it comes from the central banks, right? But understand, one of the first things you have to understand is the general cycle of the currencies, right? They don't just go up and down all the time willy-nilly. Now, there's a general cycle, and that's probably been thrown out somewhat over the past, probably about 8 years, 7 or 8 years since the global financial crisis, because the central banks were so stretched and they were using such unusual measures to try and stimulate growth and keep things going, that the normal cycle is out of the loop. But what we are seeing now with the Fed raising rates, I think the UK, the Bank of England will be under pressure to raise rates, the ECB looking to taper and reduce stimulus. We are going to come back into a normal phase here. Trading is going to be much easier because the cycle of the currencies will go through like a peak and trough situation. Now, it might be hard to see there on the, let me see if I can just blow this up a touch. Well, no. So one of the key things is now the central banks usually have an inflation band between 2 and 3%, right? So when the markets are peaking, inflation will be above 3%, right? So you get prices rising, demand increases, employment hits full capacity, increased net capital flows, and reduced savings, right? The thing's overheating. So what the central bank needs to do is raise interest rates and calm it down. So usually that will be a bit of a cycle. So they'll raise by, say, 0.25. They'll check out how it goes against how the currency went against that, and the economic data, has it simmered, has it slowed down, and there's about a 3 to 6 month lag before interest rates actually impact anyway. So that's another thing to think about. But if they haven't calmed down somewhat over the next month and they really overheat, like we saw with the Bank of Canada recently, they will raise rates again until people stop spending and realise that things are becoming more expensive to borrow money and those sorts of things, home loans, everything else. So that's where you get the contraction. Money becomes a bit tighter, and then the currency or the whole economy should go into a bit of a trough. Now, that's where inflation gets below 2%. Now, this isn't an exact science, right? So the 2 to 3% band is their measures. If inflation goes below 2%, well, they need to give another kick in the belly. So what they do is they start cutting rates, right? So they try and make useless or not as beneficial to save money. So people start spending, increase consumption, these things. They're trying to stimulate economic growth. They do that by cutting rates, sort of forcing you to take out your savings and spend it, because there's no point sitting in the bank getting hardly anything, right? And they do that cycle, that process, until things start to pick up. So if things don't pick up from there, they may cut rates again, right? Until things pick up, and then the cycle goes back towards expansion. And then we start to look, once the economy start heating up and it gets closer back to 3%, they will start to talk about raising interest rates if it gets above 3% again. And this is the normal cycle, right? So where does currency direction come from? Well, it usually comes from this cycle of the central bank management of the economies. Now, how does the central banks really measure this? Well, what they do is, right? They look at the economic numbers, right? All those calendars you see, and this is the calendar we've got on our site. They manage the whole flow of these numbers, or inflation itself, through all the different numbers in the economy. Now, I'll come to an article I've written for you, and you can read this after this webinar. One of the key things is, I mean, there obviously is there's a consumer price index, an inflation number, a raw number that the central bank can, pin its chest on. But what we also have is a whole range of other economic indicators. Okay, these are the economic data. They're basically economic indicators for various parts of the economy, right? And they will tell you what's going on and if things are going well or if they aren't. Right, so what you're looking for is like retail sales. Let me just give you a bit of an example of retail sales and unemployment. Okay, if retail sales is lower, right, then generally, okay, people aren't spending as much, which means that's a direct flow into inflation. There's no one spending, well, there's no inflation at all. If anything, it's negative. Well, inflation is dropping. Unemployment, right? Unemployment rate and change. This is for all economies. If unemployment is rising, okay, well, that means there's less people with jobs. There'll be less spending, less retail sales, etc. Okay, so if there's more people with jobs, well, then there'll be more spending because more people will have money, and you would expect retail sales to go up. So the general cycle of the numbers here, okay, they should flow together, but they all give us a little snippet of what's happening with inflation. Now, sometimes these numbers can be extremely out of whack. Like retail sales may not match up with the unemployment rate. In that situation, right, what we end up with is choppy markets where they're sideways. What traders are looking for at the banks, and this should be what you guys are looking for as well, a connection between the data that actually gives us a very specific answer to what is going to happen with inflation at the next release. So if retail sales was weak, ideally we'd get unemployment rate is weak, right? So people would be selling euro primarily because they would be thinking, okay, this is going to lead into lower inflation, and that's what we've got later on here this evening or today. Lower inflation, and that's going to lead into a potential interest rate cut, and that's why the currencies go up and down. So coming back to that original image, so as the interest rate cycle, goes up and down, you can get this from the numbers, and that's why everyone in the market focuses on the economic data so closely, and that's why it moves the market, right? This is where momentum shifts. And ideally, for good trending markets, we get economic data that is all the same, like all negative or all positive, right? So we've just had funnily enough, the consumer price index here for the Aussie dollar today, right? Now, it was 1.9%. That's a positive number, but it was less than expectations, right? So that's the raw inflation number. Now, everything from here on in for the Aussie for the next month, right? And we will have the RBA due next week. Okay, their rate decision. They'll be looking at that inflation number going, oh, well, it's soft. What does that tell us straight away? Well, there'll be no rate hikes in Australia anytime soon, right? Because inflation still, it's not over 3%, right? Don't forget they have a historical inflation band of 2 to 3%. If anything, they'll be slightly disappointed that the inflation numbers are weak, and they may sort of indicate that they may have to do something to stimulate growth. They have been sitting very quiet the last sort of 6 to 12 months, so I don't think they'll do much. But then from here on in, after that RBA meeting, you go through and you can find the Aussie numbers, and you'll be looking to look at those numbers, and that will have an impact on inflation and the central bank's performance at the next policy meeting. All right, that's the way we look for this. So there's a number of different things. So, and also don't forget, when we're looking at trading, there's two currency pairs. So you've got to weigh up, okay, the euro relative terms to the US. Are these numbers strong or not? Right? Now, consumer price index. This is one of the other things as well. You come back to the central banks. Now, they're meeting every 4 to 6 weeks, okay, depending on where they are. Now, they generally, in their statements, and this is where direction comes from on the fundamentals, they will tell you in their meeting what they are looking at very closely. Now, one of the key things for the ECB as far as tapering in the future and changing their stimulus plans, which will lead into rate hikes and all those sorts of things down the track, is inflation. They need inflation to be up. They can't really start tapering if there's no inflation, because that means no one's spending. And that's why these European Eurozone Consumer Price Index numbers today are very important. And once we have those numbers, and we had the ECB last week, it's a bit of a reset. All the data from here is fresh for the next round of inflation numbers at the start of, the end of next month. So this is where you connect the dots, and that's where raw direction comes from. Okay, so as I said, we'll send you a few of these links. This is the Forex Fundamental Analysis 101. You can actually go through this and have a look. We'll explain in a bit more detail how the economies work, how the countries work, the metrics, the tools, and then the economic cycle, right? And then you can get a very good idea around where the direction comes from. And once you understand that, it becomes easier to work out what the central bank sentiment is, which is key to direction, and then where those economic numbers come in. And that's where you'll find the best trades, when those economic numbers are with the central bank sentiment. All right. Now, let me just come into this. Now, that's one way to look at it. Now, one of the other key ways, okay, to really identify this is get on your charts. Now, some of you would be aware of what I'm using here. It's Reuters Zenith, okay? So this is a professional package that, if you're a professional trader, you need to have something like this, okay? It makes analysis easy. It makes, you can't trade through it, unfortunately, but it makes analysis easy technically and fundamentally, okay? We can look across the markets at the numbers, at the technicals, and then we can also go in here and actually research a little bit closer, more details around those central banks, just as that loads. But that's what you're really looking for. So, coming into a situation where we've got the Eurozone CPI coming out, you can actually compare the numbers. So you can actually sort of see what the top economic indicators that the central bank is looking at, how they're operating. Right? Then it gives you a bit of a snap picture. Saves you keeping a bit of a journal, that's for sure. All right, so you've got your central bank pages there, but let's come back to the technicals here for a moment. Now, one of the easiest ways I like to do it. Now, I've got the majors here, and I've got these set up on a short-term basis. Okay, and that euro, I've got to say, is all over the shop at the moment. But so we're looking generally for your technical levels on your hourly charts. Right, and you can see where those pressure points are, those good entry levels around your trend lines. Now that's all well and good. Now, if you had a look at the daily analysis, okay, you'll notice we put up 4 charts. So let me just come back up here and see if I can get that up. So with the daily analysis, the idea is you want a bit of a snapshot, and the reason why we do this is to give you a look short term what's happening, then longer term, so you can get a very clear picture long term, exactly what's going through in the market. Now, I'll start adding these trend channels, which is what I'm going to show you how to draw these. But one of the key things, you can see it here as well. So short term on the hourlies, this is where the price action is. If you stare at it too long, it'll drive you crazy. The next chart here is the daily analysis. Now, I've got a bit of a trend channel here, which you can see. I'll draw it on the other charts to show you. There's an arrow in the way there. So what you're trying to do on the daily charts is look for overall, trend lines is another good thing, but also the direction. This is where you can identify currency direction very easily through your technical charts. And then you can see very clearly on the weekly and the monthly charts what's happening there. So it gives you a bit of an overall picture across 4 different time frames what the euro is doing. Now, so coming back to my templates here. Now at the top here, I've got a number of different things. So this is where I've got the templates that I use to do the daily analysis. Okay, you'll see this load in a second. And you can see a bit of a picture here of, okay, you can see the dollar index broke down after Donald's speech today. He'll be disappointed with that. You've got on the dailies, I've got 2 things here, right? So I've got the trend lines where it's broken down, but I've also got a bit of a trend channel to try and make it easier for me to understand what's the euro doing. Okay, I mean the sort of dollar index. And I can see very clearly it's going down because it's already broken down through that channel, which is even going lower. On the weeklies, it's broken down there as well. although we do have another major support level coming up at 86.65, and I'd say long term is still basically trading sideways. But up here on the left, I've got probably a new tab that I've sort of put in a short while ago. Now I've deleted all the trend channels off this, but I want to show you how simple it is to identify trend direction. And one of the things you can do is you get your daily charts up, right? Now, if you do have Reuters Zenith, this is going to make it easier for you. You come down here to trend channel, the one with 2 lines. Now, all I'm looking to do is, okay, so I can see euros going, sterling is going up, right? So what I'm trying to do is give myself a very clear picture of where it is at the moment. Now, there's 2 things you can do with this. Now, I can sort of just, sorry, that's the Aussie dollar. You can actually just sort of leave it like that, okay? And you can see very clearly what is happening on the currency, or you can even actually micromanage that and go into the dailies a little bit closer, because you can see, it is in a big trend channel, but the Aussie has been climbing for a bit of time now, just as that US dollar's taken a bit of a hit. And let me just extend that left. Okay, and then you can start to see very clearly when you come in to try and work out, okay, what's the overall direction of the currency? Well, for the Aussie, it's up. Okay, whichever way you look at it. That's going back to sort of probably the start of December, which isn't long term. Or you come back to the overall picture, go back to 2015 where it bottomed out, to the start of 2016. It is rallying, even though it's not really going a hell of a long way, right? So that's one thing that you can do, is actually get these trend channels in, and it makes it easier for you to identify, okay, what's going on here? Not just short term, long term. What's the Aussie doing? Now you can go through this. As I mentioned, I'm not extremely familiar with MT4 because I don't use it a lot for my technicals. Okay, I draw trend lines when I'm using Trendline Trader, but that's about it. So when you come down here again to trend channel, now this is, and the other thing is too, when we're drawing trend lines, we're looking very precisely at a lot of different things. When we're drawing these trend channels, I don't mind them being a little bit looser, not as exact as my trend lines, because all I'm trying to do is identify the direction of the currency, right? I'm not looking for an entry level. I'm just trying to identify the direction. And this will make it easier for you guys. So when you come back to trade, okay, you've got this already on your charts. Okay, you know generally what's going on as far as the trend goes anyway. You've got trend lines on your daily charts. What we're trying to identify is what's going on in the currency. Okay, now this is an odd one, right? So dollar yen, to me, I've drawn this a couple of times, but you can almost have a couple, right? So it's almost in a bit of a sideways move, sort of slight downtrend. Looking at that. The move down here from 113 to sort of 108.68. That's just sort of like a month. It's not really long enough. And so you can sort of see that. You can see that sort of green line there. It's not really pronounced. Okay, if anything, and if you've got clear direction in the currencies, they will be going. Okay, it'll stand out like the Aussie and Kiwi do. Right, so. I'm just going to leave that. So the thing is, don't go looking for something that's not there, right? So you're looking at these currencies going back to sort of November, right? Okay, if I went back to November here, let's just have a look. Okay, so it's sort of trading sideways. It's broken down. If you wanted to do anything, get a stretch, and this would not be wrong by any measures. You can actually have a bit of a trend channel there to really isolate that current move. But as you can see, you'll probably look at it and go, well, yeah, okay, it's in a bit of a sideways moving activity at the moment. All right, so that's pretty much it. So basically, what you need to do is you need to get your head around the some of the tools here. As I said, you hit the Ray, like Euro here at the moment as well. Another very good example of what's going on. We all know Euro has been going up. Okay, I can extend that to the left as well, make it much clearer. And you can see that where that Euro is sort of rallying. I've also got some other levels here on the top side and the downside. But you can see very clearly, once again, okay, euro is going up. Okay, this is a, you know, I've got a situation here on my charts where it is very pronounced at the moment, so it makes it a hell of a lot easier. But sometimes, you know, the currencies aren't, or the US dollar in this situation isn't as clear cut, so you don't get it this easy. But you can see here, once you actually do this, and I'll just do the last dollar CAD here. You can see dollar CAD's sort of a little bit all over the shop, whipping about on some crazy numbers. To me, it's a little bit of a tough one, but I mean, there is, you know, right at this point in time over the last month, okay, we have been sort of belting to the downside. You know, if I just extend that left, okay, you can sort of see where you're trying to isolate the general movement. Okay, now what you have to assess, actually, this is not a bad example to sort of run through this one, is you look at it overall and go, yeah, well, it's come from the bottom, top. This is a bit sideways. It is trading lower at the moment. That's the general overall sentiment. But the daily sentiment, I would probably still consider those two trend lines in a sideways moving market to be more accurate. So once you draw the trend lines and these trend channels, it'll become very apparent to you what is in a clear trend and what isn't. All right, so and that's the way to do it. So there's two parts to identifying currency direction. This is the easiest. Okay, so you're coming back to looking at the numbers, right? And understanding this pattern or this economic cycle may take a little bit of time for you to work out how those economics sort of fit in, right? With the central bank, the way central banks manage the economies. This economic cycle is this is like economics 101, by the way. It's not just necessarily trading, but the central banks do manage the economies around those economic numbers, and that's where the raw momentum shifts in the direction will come from. Then secondary, to identify the easiest way to do it, go to your daily charts and get some trend channels on your charts and see if you've got very clear trends. Now, you can see here, once again, the Aussie, Kiwi, Euro, and Sterling, you know, all look pretty groovy, right? You can see also dollar yen and dollar CAD, you know what, they look a bit like a bit of a basket case. They're actually just sort of probably trading sideways. So, you know, with that, don't sort of fool yourself. In this situation, I'll just sort of, I know dollar yen's broken down here through 110.14, but it still hasn't gone through these other lows. So I'm not really thinking it's in a massive downtrend just at the moment. And that's the way you can do this easy, right? So it's, you know, funny enough, the more sophisticated you become as a trader, the simpler things will become. So then when you start going through your charts, if you have it set up like I've got here, we will have these templates available for you very shortly to download just in one application. Actually, Reuters has done a great job for us to allow our clients to get this. You can actually see here how I've incorporated the trend channels on these on the daily charts. Okay, I've left them off the hourlies, and even you can probably do this on the weeklies, actually, for that matter, I should say. But it is very easy. Then you can sort of get a very quick overview of what's going on with the currencies and where things are going, right? Especially when you've turned the computers on, these are good pages to turn on and go, okay, what's the overall direction here? Has there been a change of sentiment? If there's been a big change in the overall trend channel there, that's going to come from a central bank announcement. Then you can go and find where that announcement came from. All right. And that's pretty much it. This is not meant to be a long-winded webinar. It's supposed to be very precise and specific. And we want to try and keep, giving you guys a little bit more edge around using specific tools like Reuters Zenith. Okay, this is a great product. It's $99 a month. We'll have I think there's a link on the website already. But if you're really thinking seriously about trading full time or even the funded trader program, you probably really need to have a look at this, because it's your connection to the market. And as I said, not only does it cover the what's going on in the majors technically, it also covers everything what's going through the market fundamentally. And you've also got those real-time data releases there as well. All right, so there you go, guys. So keep an eye on these economic numbers. I hope that explained to you why these economic numbers, where they connect to the market. Okay, obviously the higher impacting numbers are more important, and they are higher impacting because they're the numbers that the central banks look at probably closer. Okay, so the economic calendars do make it a little bit easier for you. And then once you've got yourself organised there, you can start to come into the actual central banks. And once you've been trading for quite some time, you'll understand where all the interest rate cycles are for each of these central banks, and that's just something that sits with you. Okay, the Fed still in a hiking mode, Eurozone. Well, they're thinking about tapering. UK, well, last night the Bank of England governor came out and mentioned they got to fight. They got to start fighting inflation. To me, that's a sign that they could potentially be raising rates. If anything, I was a little bit surprised sterling didn't go higher on that, but it started to move already. The Swiss, well, they're just generally neutral and negative. Australia are neutral at the moment. They haven't done anything for quite some time. The New Zealand, well, they had really weak CPI figures just over a week ago. That would push them towards sort of an easing sort of bias. Canada, well, they're doing a hell of a job trying to keep that place going. The numbers are so wild, but they have raised rates a couple of times in the last couple of months. So that is that's a market that is potentially still simmering and more hikes on the way. Japan, well, they've had negative rates for 30 years, so I wouldn't worry about them. So, but that's what I'm saying is once you get tools like this and you start trading, you look at the currencies every day, this will become second nature to you. Okay, then you can start to really work out, where those great trading opportunities are. All right, any questions, chaps? I wanted to run through that reasonably quickly. I didn't think there was any reason to really drag it out more than that. Hopefully you understand that, the most simplest form of identifying currency direction is using the daily charts. Funnily enough, you could use the weekly ones as well. And just to identify whether they're going up or down. That's all you're trying to do. You're not trying to work out specific entries and things. You want to be able to look at the currencies at a glance and see if they have clear direction. Because that, funnily enough, this is where, when you look at, say, Aussie, Kiwi, Euro and Sterling, you should be probably thinking, well, I'm a buyer because this thing's in an uptrend, right? And that's why we're looking for that currency direction in the first place, is to actually work out what side of the market where we should be on. All right, so I hope that makes sense. I'll get this up on the webinar archives as quick as I can, and hopefully we can continue to try and make some cash out of these markets. Now, just before we go, just keep an eye on we've got some German employment numbers coming out, but the inflation numbers here are much more important than the unemployment rate. If we get strong inflation today and strong unemployment rates, euro will go up. If we get weaker ones, well, then it goes with the weaker German numbers. And that would sort of really put a dent in the ECB's plans to start tapering their stimulus program, right? And that would see euro drop, I'd say, quite aggressively. But don't forget, we do have the FOMC rate decision later in the North American session. That will be the key data for the trading day. But it can't really make up its mind at the moment what it wants to do. So, I'm sort of sitting here at the moment. If there was no euro data, I'd probably be buying on a break of the trend line here. But because that eurozone data is coming out, I want to see what that does before I do anything. And that's where currency direction will come from short term, is those eurozone numbers. All right. Okay. All right, guys. Thanks for joining me. We'll catch you in the trade zone. And good luck with your trading. Any questions? You can ask me a question in the trade zone there, or just send me an email and we'll get back to you as soon as we can. All righty, cheerio.